Good morning, this is Steve O'Hare and today is Wednesday the 6th of October. Welcome to another Talking Bull. This is program number 475, getting there eventually. So let's take a look at what's going on in the market highlights. We've got Asian markets failed to follow their Western counterparts higher with moderate losses throughout Japan, Hong Kong and Australia on the back foot this morning, the indices after the nice drive higher yesterday. Soaring energy prices provide a significant warning sign for monetary policy with rising inflation and treasury yields, providing an environment where central banks look likely to begin tightening monetary policy. The RBNZ raised rates by 25 basis points as expected, making the beginning of a move away from the rock bottom interest rates that we've seen. Chinese concerns around Evergrande and an energy crisis and the US-China trade relationship remain highlighted as concerns. German factory orders have slumped to down 7.7%, marking the worst contraction since the height of the crisis in April 2020. Looking ahead, keep an eye out for the latest UK construction, PMI and eurozone retail sales figures in Europe. Meanwhile, the US markets will be geared up for the latest ADP payrolls and crude inventory figures ahead of non-farm Friday this week. So let's dive into the charts and we'll go through the Forex to start with. Let's look at the Eurodollar. Eurodollar has broken down below this support line around about the 116.12 area. Under pressure, 115.68 trading as we speak. And these are the lowest levels since July 2020. So significant breakdown in there. We had a bearish flag forming, looks like it's breaking lower here. That would have a projected move significantly lower. Let's put the measured move here and look for this to break potentially down to 114.50 on the Eurodollar. Short-term price action making its way down to the bottom of the ATR levels. That comes in at 115.50. So under pressure on the Eurodollar side of things. Cable was performing a little bit better than Eurodollar yesterday. Let's jump to the weekly chart in cable and we see that it's back on the horizontal support line coming in at 135.66, but looks under pressure. We can see that this week we've failed to regain the ground and we are engulfing yesterday's positive price action, also potentially engulfing Monday's price action as well. So negative on sterling dollar. Dollar index, we had a little bit of a sell-off and now we're seeing the bounce. Dollar yen, this is filtering through here, looking pretty strong. Inverted hammer, this is a potential morning doji formation, we call it. Good bounce back yesterday and potentially kicking on again this morning. On the Aussie dollar side of things, again, we know this is one we have been watching. Didn't manage to get above the 73.15, and the hanging man candle formed yesterday's price action, and we are following through. So an evening doji style formation there. Let's look at cryptos. Cryptos seem to have held up well yesterday, and we are projecting higher. As we said, from this double bottom formation, the projected move was around about the 61.8% fib, around about 51,090, and we also have the 53,000 area, which we see as the potential target for this move. If it manages to get above there, then it does open up the move up towards the 57,000 area. But I have a feeling that we may struggle to get much higher than that. Let's have a look at indices next. Indices, as we can see on the back foot this morning, even the FTSE, although the dollar strength is there, that's not getting hit quite as hard as the rest, and but very much under pressure on the price action side of things this morning. For our chart, we are breaking, or we've just bounced from the bottom of the Ichimoku cloud. That'll be the support level there, really, 69.80. If it manages to break 69.80, then we should open up really a more extensive move down towards maybe the 69.35 level. On the DAX side of things, we have broken below. Let's look at the daily chart, which will give us a little bit more interest. This is the lowest level we've really seen since 13th of May. We've managed to get down to 40,894, trading about 40 points higher than that. Next level of support really comes in around about 14,827. The low on the 13th of May was 14,809. So they're the two levels we are really targeting. That then should, if we manage to break there and close below there on a daily basis, that will be pretty negative, and it will have put this top in place. We can see the sort of like remnants of a head and shoulders formation, although it's a complex one, and we can give some projected moves over the next couple of days if we manage to break that that level, which we are. If let me draw it in here now. It might be better to draw it in on a weekly chart. No, it won't. It's complex left shoulder, the head 16031, the right shoulder. So we are now below the neckline. So for me, that's negative. Probably this is lining up my gun to head trade, which I've been trying to sell the DAX this week. Managed to get stopped out yesterday, and it's already breaking lower. Really, if we do get a break of this 14,809, 827 level, then it really does open up an extended downward move. The measured move target for this formation would be down to 14,000. So that's pretty significant. Normally what happens is when it breaks through the neckline, we do get a retest. So maybe still potential to get into that trade. US under pressure as well. We can see that this sort of topping price action that we're seeing. And again, over from last Friday's low, 33,500. That's really the level that we have to retest before the 33,000 support opens up. We can see measured moves along here, but really looks to have formed a similar sort of head and shoulders formation. The Nasdaq is under pressure. Obviously, the tech stocks took a hit with the downtime that we've seen over the big websites, Facebook in particular, and we bounced off the 14,383 level, but looks likely to retest that this afternoon. S&P has rejected the move towards the 4,400, and again looks really under pressure. All the upward trend lines have been broken. Let's take a look at commodities. We've got some interesting moves going on here. This looks like the only bright market at the moment, although obviously for different reasons. Really, the OPEC decided not to increase supply cuts, and we should really see oil driving higher. Obviously, we've got dollar driving higher at the same time. Normally, when dollar drives higher, we'll see oil come off, but because of the OPEC shenanigans, we are seeing this drive higher. We've even seen the WTI crude oil get up to short of $80, 79.48, over a 3-year high in here. That's looking pretty good so far. And again, the Brent crude has extended higher also. So I've redrawn my Elliott wave, and I believe we're still in the 5th wave, still got potential on the upside. We haven't taken out the October 2018 high in Brent crude oil, so that's an interesting one to think about. 86.62, that comes in at 82.29. We're trading that now, so that's another $4 on the upside. Also, we can see we've taken out the October high on WTI crude oil. And the next real level of resistance that we see, we've got plenty of congestion if we look back around here, and we'll pick up levels all the way along, all the way up to $88, where we get the 78.6 fib retracement from the last swing high that we saw before the big sell-off. That's going back to 2014 down to the 2020 low, so a 6-year sort of cycle, and we are seeing this really nice looking inverse head and shoulders taking shape with a neckline around here. Now that would really produce a significant measured move target some way up towards the all-time highs. So that's something to look at. Natural gas has been even more interesting. We've broken above the 495 level. That's been the sort of like course of action, and this week we've extended even higher. We are at the moment approaching the 668 resistance, which was the swing high back from February 2014. Again, that 7-year cycle, should we say, or 7-year move. So the double bottom formation has a measured move target to 818. That's these two levels here. However, the bigger double bottom, or treble bottom we can call it, has a different measured move. That measured move requires a break of 668, a close above there, and the measured move target would then turn into 1156, which is a 78.6% fib retracement from the 2008 high. So that's, you can see in historically, natural gas goes through these, can have these really aggressive moves, and they can retrace just as quickly, but obviously that takes place over quite a long period of time, a couple of year cycle or whatever. So we are at the start of that. The only way is up really for natural gas, as I can see it. So we felt like we were having a bit of a bounce in gold. Let's go to the daily chart. We know we're in this bullish flag on the longer term chart. We saw a nice bullish outside candle back on last Thursday, and 6 days later we look like we're just about to retest the 1745 to 1750 support. Looks like it's going to break there, and with a strong dollar, I fully expect this to be on the back foot again. So really a nice head and shoulders formation formed here, and we're breaking that neckline now. So again, negative on gold for the short term. Let's take a look at guns ahead. Nothing much to talk about from yesterday. We'll see. Yeah, I sold DAX 15,029, stopped out at 15,127, got up to 15,200 plus. So yeah, decent place to have a stop. Let's go again today. For me, it's either selling DAX or selling gold. Shall I go gold? Why not? I'm going to sell gold around about the levels we're trading at the moment. Let's fill that in later, and really look for this dollar strength to continue. Let me draw my head and shoulders formation on here. How's about that one? That's not a bad one. I'll put the stop at 17 above 1755 or 1756. Maybe give it a $10 room. It seems to be slipping away. 1746. Here we go, and targeting a move to there we go, 2.25 risk reward on that trade idea. So that's what I'm looking at this morning. Selling gold, stop at 1756.11, targeting a move to 1723.61. Getting short here at the market. Yeah, head and shoulders formation, really looking for that to extend lower, and really looking around the support levels that we saw markets bounce from the other week. So yeah, that's the gun to head trade. What we're looking forward to later, as we mentioned, UK construction PMI at 930, forecast to fall 54.9 from 55.2. Watch out for the sterling crosses. US ADP, 475,000 jobs expected to have been created from 374,000 last month. Watch the US indices and the dollar crosses. And US crude oil inventories. Previous week saw stockpiles rise by 4.58 million barrels. And the markets to watch Brent and WTI. So that felt like a bit of a rapid one today. I hope you've enjoyed it. I hope it's been informative, and look forward to catching you tomorrow. Cheers.